Hello and welcome back. My name is Brandon Watson. Recently I was asked to not only create more content, but also what are my thoughts on ARKK and the overall market, as well as what positions am I holding and their performance. At the end, I'll also cover my style of trading, as well as how I find and select the stocks that I post to the channel, why I post up the charts and videos that I do, and whether or not I trade all the ideas that I post in each video. So let's go and get started with ARKK. Now, I believe friends should tell each other the truth no matter how hard it is to hear it. So let's just give it to you. We're going to start off with a volume. Volume is one of the most important things, if not the most important things, to see how things are going. So as you can see here, back in December 9th of last year, we're holding this channel. We're going up. We're rising on higher volume, which is nice. And again, just like BNGO, we hit this peak at 159.7 with lower volume. As you can see that we're declining in volume here. So we start to come out of that channel. And this last week we bounce off of higher volume before we start to trend back up, which is nice. It also lines up with this RSI coming up out of oversold. The RSI is a lagging indicator, so you can see that it didn't come up out of oversold until the second day, this first green day here. The MACD has not turned over yet, but I'm assuming that it's going to soon once we start to get some consolidation going. Now, looking at the support and resistance, you can see that we had this resistance here at 105, 106 level. We broke out over here before, and we started to rise on that higher volume before starting to come back down. Now, this was a retest of this past breakout at the prior resistance level before. Now we're starting to hold up into this 1, 2, 3 level, which we consolidated at for, let's see, December to early January before breaking up into the 135 level. So I believe that we're going to probably get some consolidation around 120 to 135, somewhere inside this level before we start to come back up. It is nice that the volume did pick up at this retest to start the trend back up. That was a nice reversal. I do believe that a lot of these stocks, these higher end stocks, are following the market. So let's go and go over to ES. Now, I like to track the E-Mini Futures, and we're going to start from back here in, what is this, May, June. So in June, you can see that we're starting to get this declining volume, even though we're starting to rise up into this 3,500 level. Once we hit this high here, this peak, we actually have lower volume from the past. These two levels here, the two volume levels here, is when we're starting to rise up, which is good. But this lower volume day at the high is not good. So we start to decline. We build up a base at that retest. It's a retest of the prior resistance / breakout. So we retest it with higher volume than before. As you can see, we're coming down. The volume is dropping all the way down to the support, which once we hit that prior resistance / breakout, we start to pick up on higher volume, so that we can hit that a retest of this resistance now before double bottoming with higher volume again from before. In this area, we have higher volume now, starting to build up into this trend. So going forward, we now hit this high at 3959.25. We have low volume up here. We start to trend down. We have higher volume on February 26th as people start to believe that maybe we hold this resistance, which doesn't. We come down a little bit further and hold this resistance / breakout right here. It's somewhat of a double bottom, not entirely, but we do pick up on these 2 days with nice volume, which is good. Start to push back up into this 39.59 level. Now, from this point forward, I can't tell you the future, though. If for whatever reason this trend does continue forward, I do believe that this channel here is about a 6%, 5.5% to 6% range. So we go up another 5.5% to 6%. That's about 7%. Well, I think that we're probably going to hit around the 4,200 level if we can break past this and create this upper range to consolidate from before we start moving forward again. Otherwise, if for whatever reason this level does not hold, then it looks like we're going to head back down to this 37-ish level, 30, yeah, up lower 37s to potentially retest it again. If for whatever reason more news breaks out that's not good, then we're just going to continue to trend down. I highly doubt that. I'm not one of those people that think that the market is just going to trend down and collapse. I think that these are all just shakeouts to get all the new investors out of their positions because they're not used to a 2-week downtrend. They think that starts to go up forever. So I really think institutions are trying to get their money any way they can, since they're losing quite a bit through GameStop and AMC and the such. So be aware of that. What I can say is this. The MACD started to cross over slightly, which is good. RSI is picking up, though it went flat for the last 2 days. So there's a little uncertainty there as we hit that resistance level. And the MACD, or sorry, the TTM squeeze slightly went positive, which is good, though that can always turn back down. If the squeeze does fulfill itself, then it is likely that we'll probably go into that higher range, though it is possible that we can just dip down further if that resistance doesn't actually hold as a new support. Now, usually when the market is in a downtrend, I don't like to hold things long, as it really hurts those stocks and it makes it harder to come up with money. As you can see with BNGO and all those other ones during that downtrend for the market, it brought down BNGO, it brought down NNBM, brought down a lot of stocks during that time. But now as the market is starting to bounce for this last week, let me see here, this last week we have 7 days worth of an uptrend up to that resistance. And if we go into, say, NNDM, go down through here, we have about 7 days exactly of an uptrend. So these stocks might be following the market somewhat. I mean, they all have their different personalities and whatnot. They all have different hype and things that might be going for it possibly. But usually whenever the market is in a downtrend, I just don't like to hold long. As you can see, there's no reason for it. I'd rather just take my profits at the top, get a new position on whatever stock I am once things start to look better. And then as things start to trend up with the market, then at that point, start looking to see where I can buy long, so that way I can swing trade for multi-days rather than just trying to take profits each and every other day. So saying all that, what type of trader am I? Well, I'm primarily a swing trader with a mixed toolset on scalping, day trading, and trend trading. Why primarily swing trading? Well, after reviewing many chart setups, I decided I would rather try to capture profits of 100% returns through multi-day holds rather than try to jump into the heavy volatility of day trading for 3 to 5% profit, or taking a year to invest in something that might not yield the same return. Finding patterns on a daily time frame is much easier than finding them on an intraday basis when things are already moving. Do I ever use fundamental analysis? Well, no, I prefer to study the effect rather than the cause. The cause being news catalysts, 10K reports, and hype-driven momentum, where the effect is in the moment. It's the least lagging indicator where things happen in real time. Studying the effect, which is the price action, allows me to scroll through thousands of charts in a quick time frame, whereas going through thousands of reports and fundamental analysis is unreasonable and unrealistic. In a single hour, I can tell you that oil stocks are about to all move, or that the housing market is about to set up. How about gold? Within an hour of going through many charts with a push of a button, I can tell you how likely gold is about to start trending, so you can either open or close your positions on that sector. This you cannot do easily as when you're studying fundamentals. Here's what fundamentals can do. They can give you an edge when it comes to holding large positions, not just overnight, but for several months or years. Going through reports can generally tell you if a company is at a lower price when in reality it should be way higher. This might give you confidence to hold $1 million on a position for the long term, knowing that it's unlikely that your position will drop 50% overnight. This type of confidence is something you just can't get when it comes to reading charts alone. Everything has a place and a purpose, and for my purposes, I prefer to go at technicals only due to time and the amount of opportunities that going over thousands of charts can provide. So what is my search criteria? Well, since I want to find multi-day strong runners, you first have to find the right setup. And the right setup entails finding stocks that have been consolidating for several weeks to months on the daily time frame. Knowing this, I want to find stocks in strong sectors with volume over 500,000 near the all-time or 52-week high, and has pushed at least 50% from its all-time low. Why these filters? Well, 500,000 and up is so that we can start to see the volume rise. I really want to look for stocks over 1 million in volume to trade, though when scanning, I don't want to leave out things that might be setting up but is currently just below in volume. The last 5 days, volume might be steadily increasing under 1 million before the major push, and I not only want to be aware of it, but inside the trend before the push. The stock market always knows something before you do, so increased volume is key. Price has to be near the all-time or 52-week high because we want to see a stock that is likely to retest the highs. If we have a price target to shoot for, then we have a prior level to manage our risk reward from. And if a stock has reached that price point once, then it may likely do it again, depending on how far back that high was made. Which is why the closer the all-time high, the better. If the all-time was 5 years ago, then it doesn't mean much for us today. And as for being 50% over the 52-week low, well, we want a stock that has already started to trend away from the lows and is showing strength with increased volume. If a stock has pushed 50% from its 52-week low, then it might have a chance to push higher. Ideally, we want the price to be over 100% from the lows, though again, I want to see these movements before it happens and not after. Now, if a stock has moved up 100% from its 52-week low with increased volume and is within 20% of its highs, then it might have a chance of not just retesting all-time highs, but breaking past it and trending further. Some of these plays last a day to a week to several months. Then some of them don't work at all. Always be cautious as this is a numbers game. Supports are always best to be bought up rather than buying on the way up to resistance. More often than not, the price will get rejected and make lower highs before reversing. There are also occasions where price just doesn't hold the support at all, at which point this is why you buy support with a stop loss below it. If a support can't hold and you just entered into a position, then I don't know what you're trying to do. But if a support holds and starts to trend up, then it might be reasonably okay to start scaling in. So do I have any positions open right now? Well, no, not really. The market's been going down for the last 2 weeks and just barely started to come back up. So I have 0 positions open. Now that it's starting to come back up, I'm starting to look for more swing trades to get into. Although as of right now, I don't really have too much. I have been busy because I am a real estate photographer. And I travel across Texas to go and photograph these houses. Yesterday I had to go to Corpus Christi. I'm from San Antonio, so that was a 2.5-hour trip. I had to photograph 3 units over there. Sometimes I have to go to Houston and Dallas, which can be 4.5 to 5 hours from where I live. I always go out, photograph the property the same day and come right back. So I don't ever really stay out there, but it can take all day to go and do some of these properties. I do apologize for not getting more videos out. Though just like everybody else who starts YouTube, they want to try and go full time. So once I get my stocks going to a certain point, then I think I'll be able to do it full time. Though as of right now, my account is at 30,000. I have no positions open at all, and we'll just have to take it from there. So why is it that I post up the videos that I do? Well, I actually got poached from another YouTuber's group. I used to post up a lot of charts in there, though they traded a lot of ETFs at the time. I'm sure they still do. Though whenever I posted up charts myself, they weren't really into it, only because they were mostly an ETF type group. And me trying to branch out into other things, I wanted to post charts on stocks and not just ETFs. So I got poached from there. I got asked to come into the Trade Runner group and start posting up my charts in there, which has been received quite nicely. And now I'm on here on YouTube posting it for other people to see as well. It's not that any of these are going to be 100% winners, though you never really know. Like I said, it is a numbers game. I don't trade all of these, or sometimes I don't trade any of these that I post up, and that's only because I am a traveling photographer. Now, when I have gone out to travel, I sometimes bring out my phone and my tablet to try and trade as I'm going out there, though that's usually a mistake because I end up losing money. So I try not to trade when I'm out there. Though if I can catch a runner before I take off on my trip, sometimes I'll hold on to them and just kind of monitor them as I make my drive across Texas. Though for the most part, if I'm able to trade here at my desk, then I'll just go and do it here and I'll see what's there. Off the watch list, sometimes things are popping and sometimes they're not. That's just how it is. That's how life works sometimes, but that's the stock market. So I appreciate everybody coming out. If y'all find this helpful, I certainly appreciate a like and subscribe, and I hope y'all take care. Have a great weekend. Thank you.